You get 3 deals a year doing that. And there's plenty of opportunities where you earn 20% interest being in second position on that fix and flip opportunity. So technically, that is like 60% annualized returns.
Hey Greg, how you doing today, man?
Hey, good. How you doing?
Man, I'm super good. Things are trucking along. Uh, I've told a few people this, but earlier last week I was able to close up my first funding connection deal. So I'm still pumped about that, and
Congrats.
I gotta, yeah, thank you. And I've got a lot of other meetings with folks this week, so it's going to be a busy week, but it's good. It's good. What's going on in your world?
Nothing much. Like actually, just found out this morning that my kind of private money lending deal should be closing tomorrow. Actually, so it's something that I was a little bit on pins and needles on because it got some minor delays, but it was still before my the due date on my promissory note. So definitely be more stoked with that once I get that check in tomorrow and I can really enjoy the Labor Day weekend with a peace of mind.
That's good. What you got planned for Labor Day?
Basically go down to the beach. Like I live in Maryland, Columbia, Maryland, so just going to Ocean City with my wife's side of the family. So just enjoying the last few days of summer before fall starts. So it's should be fun. Got any plans?
That's good. I, you know, I don't, I don't think I do yet. But I'll have to make some. So, well, that'll be to be decided at this point. So for the folks listening today, Greg and I actually met through this initiative called Project Forward that's going on in Pace Morby's Subto and Gator Method groups. And as it happens, we actually are both part of the Subto and Gator Method communities. I saw that Greg mentioned that he was a private money lender, and I was like, okay, I've got to just hit him up, and we got to have a little chat here because this is a really interesting topic, personally to me because I'm a connector. And then also, I think a lot of people are probably going to be interested to hear your perspective, Greg, as a private money lender. Um, you know, I don't know how many people really have ever heard that term before or considered it as an investment strategy. And so, when you first kind of hear of it, it opens up opportunities that maybe you hadn't considered before. Um, so Greg, maybe with all that, I'd love to hear a little bit about you, and folks would love to hear a little bit about you. Who are you? What do you do?
Yep, so definitely. My name's Greg Moss. I live in Columbia, Maryland, and I basically my W-2 previous to this was in civilian law enforcement. So I was an investigative analyst for ATF for that few years, and before that, I was a background investigator, personnel security with ATF for another like 6 or 7 years. So it's something that I enjoyed, but once I kind of got into real estate, it really kind of sucked the life out of me. So I kind of took the leap and went full time in the real estate. But how I got into real estate was one of my friends introduced me to um, basically this book called What Would the Rockefellers Do? And it kind of talked about using life insurance to kind of basically be your own banker. And it's called the infinite banking process. And that kind of drove me down a rabbit hole of figuring out uh, how to control my money and basically use it to invest in different type of investment strategies. I found out real estate was the best way to go about it. So I honestly forget how I stumbled across Pace. I think I was just kind of Googling, how to invest in real estate with little to no money. And out of all like the influencers and stuff, he kind of popped up one of his videos. I'm sure you went down that rabbit hole of binging his free content. And then that's when I decided, okay, I'm going to take the leap. I never really thought of myself as paying for any type of mentorships, but I realized that in order to really get off and learn about stuff I have no idea of, just learn from someone who's gone through it and has the experience. So I signed up for Gator first in February of this year, 2023, and then a few months later, I was hooked and found out about Subto and then joined that. And basically, so far it's been everyone says trying to drink out of a fire hose. It's tons of new information. It's very informative, but both communities have been very, let's just put away. It's a great place to learn, kind of lean on other people that are going through the same experiences as you are, and so many opportunities to basically grow and start your own career path. So really excited to kind of see where things go, especially with this little group of Project Forward, what we're doing right here, and just seeing everyone kind of working things together. Um, so that's kind of the basis of my overview.
Awesome. Awesome. And so did you have much of a background in real estate before you came across that book? Is that like the very first thing that um that kind of started this path of investment for you?
Yep. So I've had, outside of watching a lot of HGTV and the fix and flip shows and stuff like that, and house hunters, I had zero experience in real estate. I always thought it was something that the rich people only had access to, or someone with connections. Um, but I always knew that the rich people, the millionaires, the billionaires in the world, they mainly got rich off of businesses and real estate. So I kind of had to realize I wanted to be a part of that. So with no experience, just the ability to learn and the willingness to learn and fail forward, and realizing that I might be out of my comfort zone and doing something I have zero experience in. But I mean, you got to start somewhere. So
Yeah, absolutely. And Greg, from our prior conversations, you had mentioned that you are making steps towards leaving the W-2 because of the stuff that you've been learning and implementing. Could you tell us a little bit more about that?
yeah, so the main reason why I was able to leave my W-2 is just becoming a private money lender. I started trying to do EMD deals, which is basically earnest money deposits. So those are the very smaller terms where basically you can invest, basically put up 1,000 to like 5,000 or more with a wholesaler, and they just have to basically try and find an end buyer. And the wholesalers I worked with, they were all either new, or the deals they had very razor thin margins, or none of them had buyers. So it was a trying process. And out of maybe the six I did, I put five EMD of my money into escrow, and only got four of those deals. I got my money back. In the last one, luckily it was only like $500 somewhere in Florida. I don't know where anymore, but I just consider that a learning experience. Um, and just I've kind of stepped away from that up until honestly yesterday, where I talked with a sub 2 student who's looking to use me as a EMD lender on all his deals, acquiring midterm rentals.
Mm.
And it's easier for me because he's going to be the end buyer, and he already has a personal list of private money lenders. So I'll get paid out with my profits through the private money lender at close of escrow. So it's literally just me looking at the deal. But when he basically has everything lined up already, and he's just using me because he wants to be zero money in for all his deals, it was kind of a win-win situation for both of us. But outside of that, I definitely like to focus more on the short-term private money. So anything under 4 months. I guess my niche is kind of gap fund lending, so second lien position uh, on fix and flips, because that provides even a little bit higher risk, more higher return on your investment. So uh, usually I've seen 15 to 20, sometimes up to 25% is what I've been seeing, especially in the Gator community. Um, but my
Got it.
personal deal actually was from a free creative group, where I found someone that was looking for a $65,000 loan for a fix and flip opportunity for 30% interest. So that I kind of jumped on because no one else reached out to him. We had a little chat, and then it should be closing, like I said, closing tomorrow. So that's by far the biggest deal I've done, but definitely looking forward to either working with him again, or trying to limit myself to just a couple other investors, so I don't have to spend so much time, underwriting every investor and just focusing on the deals.
That's great, man. So So you went from zero to hero within a very short period of time, it sounds like, and you're still making connections and still growing. And it sounds like there's just plenty of opportunity out there for folks who might even be interested in doing something like this. Um, what kind of we're gonna have to come back and definitely maybe unpack this idea of private money lending a little bit, because you threw out a lot of interesting information there, and I think for some people who are new, maybe some of that is a little confusing, like what is a lien position. Seems basic to us because we've been hearing it, but for somebody who isn't involved, that might be kind of an interesting thing to cover. And then you mentioned some different like numbers there for returns to expect, and so that might also be good to hit on in just a little bit. But um, before we get there, what kind of like led you specifically to the lending side as opposed to maybe being like a closer or something like that? Because a part of for folks listening, one of the things that Pace Morby talks about a lot is this idea of an avatar. An avatar is like the type of role that you are looking to fill um, in the real estate investment space. And there's all sorts of different avatars, like being a closer, being a connector, being a visionary, being an integrator, and a lender, and so on and so forth. Right. So there's lots of different opportunities out there, and they're not always stagnant. You could always switch from one to another at some point in the future. But um, with all that said, so Greg, what led you to being more a lender than something else?
Yeah. So a little before me joining Paces Communities, I kind of was looking into like syndications a lot. So there was a group called Left Field Investors that talked about different ways you can invest passively, and I kind of resonated with that because I was still in my W-2. I didn't want something that was that took up too much of my time, and I kind of thought, all right, passive investing is kind of the best way to go about it. Start off and get my feet wet, and not having to basically like be a part of like real estate transactions, just knowing enough about it to invest in it. Um, so when I came across Basic Gear and joined Sub 2, and I found out about the avatars, I think there's like 19 or maybe 20, I think 20 or so avatars,
Yeah.
and I kind of learned about each one, and I definitely still fell back on the private money lender, mainly just because uh, most of the stuff, I'm not the greatest when it comes to like cold calling. That's one of the major ways that investors make their money. I'm actually part of a group of Sub 2 students that work the Cleveland and Akron, Ohio areas, and I have been doing cold calling, but I admit I'm not the greatest at it. So I wanted to focus on an avatar that um, kind of played to my strengths. And with private money lending, a lot of it is learning how to be a good underwriter and just kind of analyzing deals. And with my background being as a background investigator and also as an investigative analyst, me using that to just kind of basically underwrite the investor and just also learning how to figure out what's a good deal and what's not a good deal kind of played to my strengths. So that's why I went with private money for the most part.
Got it. Got it. Okay. That's super interesting. This is a common theme that I'm hearing when I talk to people, is like usually their previous experience in some way has given them some prerequisite skills to be able to then break out into a particular avatar, even if it's not like an exact direct correlation, like you didn't have any necessarily private previous experience in private money lending. You had those analytical skills to be able to look through and understand and evaluate the risk on something.
Yep, exactly. And in my mind, if I'm not good at something like already or have like a passion for it, then I'm just not gonna be successful. So me trying to be a direct to seller, or I tried direct to agent also, which I'm still kind of doing, is something that I don't mind doing. But if I'm not really passionate, if I don't enjoy doing it, I'm not gonna thrive in it. And it's just Pace has always said there's so many ways to make money in real estate. You have to find your niche, you have to focus on that and then just learn to build your craft around it. So um, realizing that private lending, there's different ways to go about it. There's different ways to lend money. There's different ways to kind of make money off of someone else's money as being a connector, as you know. So it's definitely so many ways inside each avatar that you can learn from that it's just an endless amount of opportunities. So I stuck with something that I kind of already knew and just had to learn about the real estate side, and definitely has helped me kind of learn and grow. But I'm still learning a whole lot, and there's luckily a
Yeah.
community that kind of can help guide me, because there's plenty of times where I was asking questions and I relied on the experience of others to say, here's what to look for. This is a good deal. This is a bad deal. Almost invested in a couple bad deals, and luckily enough, I was talking to people beforehand, and they kind of told me, pump the brakes. This isn't a good deal because of this, this, and this. And I love to say that I make a ton of mistakes, like a ton, but I never make the same mistake twice, which I try not to do. So I love to learn from my mistakes, and I hate making mistakes that might seem obvious after I learn about it. So luckily, I had plenty of people that kind of taught me the ropes, and then from there, I kind of learned, and I use what little experience I have to kind of teach other people that are behind me. So it's just finding ways that someone's throwing down a rope for me, and then I'm just extending it down to the next person. So
Mm.
being in a community definitely benefits you in the learning curve.
Yeah. And I completely agree with that, man. Like, I think that the thing that people need to understand, and this was a big eye opener for me, just that I've been recently learning and really expanding um my worldview a little bit, is you need other people to be able to come alongside you and you come alongside them in order to be successful in business. I think there are certainly cases where maybe there are some people who've done mostly like a lone wolf type of approach. But the number of people who are really successful doing that, I think, are much fewer than the people who come together and then find ways to help one another and improve over time. It's like the lone wolf path. You have very few options, and then when you come together with other people and you start connecting and building those relationships, it's like an exponential explosion of potential opportunities that you didn't have before. And it sounds like you really benefited a lot from people coming alongside you and helping give you some guidance, and then you're passing it on, which is great. Like, that's the type of thing that I think Pace would love to hear, and I'm sure that other people who are listening now are thankful to hear that people like yourself are willing to also then pass on that knowledge.
Yeah, definitely. And like you said, you try and do something alone, but you always do better when you have other people around you, especially
Mm.
not just me, but I'm sure there's other people that once they get into real estate, their friends and family aren't really in real estate. So they might seem like they're alone, or if they're trying to talk about with their friends about what they're doing, they might not care, or they might care because they know and love you, but they don't understand the path you're going down. So surrounding
Mm.
yourself with a community of the same like-minded people really helps kind of grow and accelerate your growth. And especially with me, the fact that I have friends that you know love and support me and family, but if they aren't in the same, like if they're not doing the same thing I'm doing, it's hard to truly kind of support me and help me grow. So having these
Mm.
communities is definitely like a blessing. And when people say like, you paying money for, a mentorship, it's just like any education process. You have to pay for education, and I'd rather pay money for someone that has experience and has been there already and is actually doing it that I can learn from than doing it on my own and losing money, making mistakes. So I'd rather pay up front, learn from other people's mistakes, and not make those mistakes that will cost you more money down the line compared to doing it by myself. So that's my mindset.
Yeah, makes sense. I'm right there with you, man. So, we've gone all this time and yet we still haven't defined what a private money lender is. So let's get to that. So Greg, how would you define private money lending, and what differentiates that maybe from, I don't know, like a bank loan or something like that?
Yeah, so basically, I like to think of it as there's kind of three different like buckets. There's traditional lending, from banks and mortgage lenders, where most people use to get loans on, mortgages on their houses and stuff like that. Then there's a thing called hard money lenders, and I like to kind of consider that as institutional organizations or companies. They have very strict guidelines on how they can basically loan out their money. They're very focused on the property that they're lending it on, and there's a lot more like regulations and like application process you have to go through. So it's
Mhm.
very kind of stringent on their, I guess, terms, but it's definitely quicker to get money with a hard money lender compared to a traditional lender. But then there's a third one, which I'm in, which is a private money lender, which is more of like an individual person or a group of individual people, where they don't have strict guidelines. They have their own kind of rules and things that they abide by. But that is an individual person that kind of bets more on like the horse. So like I like the analogy of there's the jockey and the horse. And with a hard money lender, they might focus on the horse more. I personally like to bet more on the jockey. So yes, you need to have a good deal in order to have like a payout. But if you don't have a good investor, that's not a good operator, it's not experienced, then they can take a great deal and make it a terrible deal because
Mm.
everything, mainly with fix and flips, is what most people like lend on. Obviously, there's the long-term buy and holds, but for the areas that make more money, higher interest is what fix and flip is that every project has some type of hiccup, some type of delay, something goes wrong, and if you have an investor that doesn't know how to problem solve and actually rectify that problem, that can like basically explode and kind of kill the deal. But if you have an investor that's experienced, that knows how to think quickly on their feet and correct any mistakes and keep the project on task, they could turn just an average deal, into a good deal or a bad deal and save it. So I like to focus a lot more on the investor and if they know what they're doing and if they are experienced enough and I trust and put my faith in them because I'm giving them my money. Obviously, I'll be protecting it, but knowing that they know what they're doing and they have my best interests in mind, then that's peace of mind for me, and it allows me to, lend out and be successful and actually getting my money back, which is the biggest thing. The two rules of money is don't lose money, and rule number two is don't forget rule number one. So that's uh, that's definitely what I like to define as the three different really buckets of lending. So
Got it. So I thank you. That I think helps clear it up for the folks listening. Um, it sounds like there's definitely risk involved in this, right? And um, I'd like to come back to that in a second and maybe ask a little bit about how you evaluate risk and what your processes are to figure out how to mitigate that risk for your lending. Um, but given the risks involved, what makes private money lending an attractive option for investors as opposed to, say, maybe just giving their money to um, like a stockbroker or something like that? Like, what is it about private money lending that was maybe appealing to you personally and that you think other people could benefit from?
that's a great question because what I'm trying to focus on is educating people on there's more than one ways to invest your money. And before I joined the community, I always thought that the only way to invest my money is if you have a job, throw it in a 401k and it's in the stock market, or if you don't want to invest in mutual funds, the S&P 500, and then that's it. So I wanted to show people that yes, you could go down that route. I'm not saying not to invest in the stock market, but compared to their like I think on average it's like 7% returns, you can as long as you are safe and smart with investing in, like I said, the right real estate investor in the right deal, it's in my mind actually safer because it's your money's backed by a hard asset. You have a little bit more control of your money because you invest in the S&P 500, it gets affected by something halfway across the world, and then you have no control over it. And the thing that I always hated was the fact that, like with my TSP in the government, I would log on, see that I lost like $10,000, and all everyone could tell me is, okay, well, just give it time. It's going to eventually bounce back. And I had to accept the fact that it's losing money and I can't do anything about it. With being a private money lender, being able to choose where like, you put your money and having honestly the most likely effective outcome without actually being an investor yourself, it gives you the opportunity to beat out those returns. And a lot of times, like you find the right deal, like some of the deals I've been finding, you could double your money in 3 years or so, even a little bit less if you find really attractive offers. So there's always risk in anything that you invest in. And in my personally, you have a bigger risk of just leaving your money in a savings account or high yield savings account that offers you 0.01 or maybe a couple percent interest points, and a lot more risk. And the stock market, with zero control over it, goes up and down. It's very volatile. But having a sense of purpose of where you're putting your money in real estate, I feel like there's risk, but the reward is so much higher. And it just opens up your opportunities for just more investment opportunities down the line. So that's my way about it. And of course, there's other people might have other issues, but at the very least, diversifying your portfolio if you have one, just like 5% at the bare minimum, and then watch that outperform all those mutual funds that require fees and stuff like that in this S&P 500. And then when you're more comfortable, then you could up your allocation, but you gotta at least try. And if like people say that it's risky or unsafe, they're just uneducated and they're naive and ignorant, and that's not a bad thing because I was like less than a year ago. So unless someone's telling you and actually showing you the ways that you can actually be safe and invest, then you're not going to know. So just having an open mind and trying something new will definitely benefit you in the long run.
Yeah, yeah. And maybe one thing I wanted to ask a little bit more about. So you said you could double your money over what you said about 3 years roughly. Did I hear that correctly?
Yeah, because basically when people think of like annualized returns, like with like the stock market looking like 7%, the shorter term deals that I'm dealing with, which is 4 months and under, let's just say on average, like an average fix and flip loan is like 90 days for like a light rehab. Basically, if you technically multiply that, it's technically 4 deals, but obviously you don't have like deals back to back. So let's just say at the very least, 3%, you get 3 deals a year doing that. And there's plenty of opportunities where you earn 20% interest being in second position on that fix and flip opportunity. So technically that is like 60% annualized returns. And then obviously if you ideally sticking with that same investor, so less risk, and then just kind of keep rolling that money over and over, then you will have a good chance of doubling money in under 3 years. So this obviously it's harder to come by, but everyone thinks of investing in real estate as just the long term, multiple years, and that like you get the highest I've seen is 15%, but usually it's 8 to 12% is what you get on that. So it's safer going down that route, but obviously it takes longer to grow your wealth. So uh, ideally, having like a little mix of both. Like right now, I'm focusing heavy on the short term, but as I grow my money and get longer, I will probably try and diversify and invest more in like the longer term aspects and maybe in syndications where I have to put my money in longer term deals. But right now, I'm just focused on the velocity of my money. So I'm really trying to focus on just rolling that over as quickly as possible. And that is more risk, but as long as you're investing in the right people and you know what you're looking for, then it's definitely more rewarding and pays out better in the short term.
Got it. So what makes, this, that you mentioned the idea of shorter term being more risky, which leads to, I guess, the higher return, right? Greater risk, there's going to be a greater reward.
Yeah.
So what makes like a shorter term lending opportunity more risky than a longer term one? So it's probably not inherent to like the length. It's something else that makes that more risky.
Yeah, exactly. And so like when I was saying like second position, so there's everyone thinks of a mortgage, like your mortgage on your house, that's a first lien position. So whatever bank or mortgage broker basically has the loan out on your house, they're in first position. So if something happens where you can't make your payments and you go into default and foreclosure, they get first right to take all basically the equity, out of the house and basically foreclose. And if you're second position, which is most of my deals are in, you're behind them. So if let's say you have a house and it doesn't have enough equity for you, basically that first position takes takes all that money until they get paid back, and then it gets trickled down to the second position, and sometimes there's even third and fourth, which I would never do in my mind, like a third, fourth position. Second is probably like the lowest I'll go, but that's why you have to kind of underwrite the deal and make sure that if you're lending either on a property, if that doesn't have enough equity in it, then you need to ask that investor to make sure that they have something that's cross collateralized. So it's basically a different entity, like whether it's another house, basically anything that has a title to lend against, so that if you need to foreclose, then you don't have to basically foreclose on that property because you're not going to get your money back. Having another property that you can, worst case scenario, foreclose on that has the equity in it that can pay you not only your principal back, but ideally the profits you're supposed to get. That's what is what makes your investment kind of safe and secure. So there's, I guess I go through the different aspects of one thing called a promissory note. So making sure that that's basically explains everything that you're lending on. So with my deal over the summer, I lend for $65,000 for a 30 days, for 90 days, and with a 30% interest. But as some people don't understand, I didn't until just a few months ago, there's a thing called usury laws where each state's different. Like I lended on a property in Georgia, and their laws, I think, 18%. So technically, you can't charge interest more than 18%. But what I did is, one, I used a transaction coordinator, which I recommend everyone doing because they're the professionals that handles the paperwork, follows up with the title company or estate planning attorney, estate closing attorney on a regular basis. And it's in the contract that basically states that it's basically a financing fee or like a flat rate. So it doesn't really say interest. And a lot of times also you could add a joint venture agreement, or we call it JV agreement for short, just to kind of solidify the fact that it's not interest involved. It's just a flat fee that you'll be getting back. So that's kind of here or there. But it's kind of a track. But yeah, so basically that's kind of the whole aspect of first, second position. So just making sure that you have enough equity in whatever place you're putting a lien against to have you covered.
Got it. So to help mitigate some of this risk, when you are considering a lending opportunity, you got to look first at the position of the lien against the property, right? That's your collateral in case something goes wrong. And then the other thing you said in there was to make sure you have a transaction coordinator in place, so that way they can handle like all the paperwork, make sure everything's in order. They help, I guess, work with the title company on your behalf to make sure there's nothing missing and all the parties understand what's going on. Are there any other things that you do to help mitigate risk as a private money lender?
Yeah, so basically, unfortunately, with my last deal, I didn't really do a great job of is you're supposed to really ask for references. So if there's an investor, he says he experienced, I always make sure that I ask him, like, how many flips have they done? Have they used the same contracting company? Like on average, I understand that no deal, no job, goes perfectly start to finish, but on average, have they finished their project in that timeline? Have they accounted for contingency plans so that they know things might go over budget? So they plan for that. Do they have multiple exit strategies? So if it's a basic fix and flip and they want to sell it, but let's say for some reason that the market takes a huge dump and they can't sell it on the open market, what's their backup plan to pay back their lenders? So ideally, having two backups, having two exit strategies is what I look for. And then also, like I said, like ideally interviewing references to kind of see like how they treated their past investors, um, if they're happy, if they're still investing with them, why not. So that's one thing I didn't do my last guy, but I definitely will from here on out. Because if you don't do that, they could tell you basically everything might look great on paper, but if you don't ask someone that's actually been through lending with them in the past, then you don't know like how they really operate. So that's definitely in my mind one of the biggest things. But that's kind of everything I think of on the top of my head in terms of just kind of betting as
Yeah.
much as I can on the person.
Do you ever run like background checks or credit checks or anything like that?
So I personally don't. I know plenty of people that do. And kind of one of the things that also stands out is people think of a private money lender as not really charging points up front because that's what hard money lenders do and like traditional, I guess, brokers do. But that's also something that's kind of myth because there's plenty of private money lenders that charge points. People say don't pay for money up front, but if it's for things like a lot of people do credit checks and stuff, I it is important, but I personally don't do it. I like to just kind of go off of having a couple conversations with the investor, going through the references, and really truly betting the deal and covering my basis. And I guess one thing I did forget is my last deal, I didn't have a deed in lieu of foreclosure. So actually, a couple of days ago, just looking at excuse me, my promissory note is ideally you want to have kind of like everything laid out perfectly so that things, go wrong or happen. It's just in writing legally, like this is what's going to happen. I put down that I will get paid out on close of escrow, which is at the end of this week. And I give a 3-day grace period because obviously there's title delays. Like with my guy, there was delays, but luckily he got finished multiple weeks ahead of time. So it was still going to close early, but there's always going to be some type of delay with title. It's like company one way or another sometimes. But after that 3-day grace period, I put down like $100 late payment fee each day, but I didn't like state when that would end, and then I'll start the foreclosure process. So that's kind of be like open ended. And luckily, the property that I put a lien on was in Georgia, and I believe Georgia is it's called there's judicial and non-judicial states, and if you're in a non-judicial state, it's usually called a deed of trust. And what that means, it's easier to foreclose on a house compared to a mortgage, where it's just, the borrower and the lender. Deed of trust is the borrower, lender, and the trustee. So the trustee has that basically deed in place. If they want to foreclose, it's lightning quick compared to the months or sometimes even years it takes in judicial states to foreclose on a house. So that's another thing I always recommend is if you don't have a deed in lieu of foreclosure that states that, if you default, you don't have to, we can bypass the foreclosure process and you just give me the property and then I, dispose of it my own way. If you don't have that, at the very least, making sure that you know where you're putting your lien in, what state it's in. And if it's in a judicial state, then you might realize if you foreclose, you're not going to get your money back like within a matter of days. It's going to take a while because it has to go through the court process. Something I'm starting learning on, so I don't know the exact specifics, but it's everything in the court and stuff takes a while. Like it takes unnecessary long amount of time. So that's one of the downsides, and you have to really protect yourself. So
Got it. So it sounds like you need to have a couple different backup plans in place. And you need to probably understand a little bit about the foreclosure process and things like that in the state that you're lending in. So that way you're covering yourself in terms of risk on whatever deals that you do.
yeah, exactly. And like the one saying that I've heard that is very true is loan to own. So you always need to go into a deal kind of expecting the worst and realizing that it's just a property that you don't mind taking over and have the ability to, whether it's sell, to rent out yourself, whatever it takes to earn your money back. But you have to, go into it expecting the worst case scenario and having your own backup plan for when that does happen. Because if you go after just the rate of return and it's like someone's offering 40 or let's say 50%, which 50% I don't think I've really seen, but like it's someone offers that, you just focus on, oh, that's a insane amount of return. Let me just put my money in that. Things go sideways and you have to foreclose. And it's like, well, what do I do with this? Like, it's having a community is definitely a plus because you need to kind of reach out and get help from someone that can show you how to offload that property. But it's best to invest in a place that you kind of know, and not know, you can easily find a way to sell it off and dispose of it yourself. So it's definitely one thing that kind of holds true with me is with everything I do. I make sure it's a good enough deal that worst case scenario, I'll gladly take it over and either sell it, or if it's really good, rent it out myself. So
Got it. Okay. Well, Greg, I think we're gonna wrap it up here. Thank you first of all for taking the time to meet with me today and chat a little bit about being a private money lender. I think some key takeaways from this were private money lenders, being a private money lender is a really great opportunity if you're wanting to be an investor in real estate. And apparently there are returns out there that are pretty darn good. But you also have to cover your risk at the same time. Make sure you have some backup plans in place. Make sure, it sounds like also that you have some folks that you're connected with that can help you along your path too. So that way you're not doing it all alone. Greg, before we go, I want to make sure we plug your information here at the end so that way folks can know how they can do business with you and connect with you going forward. I'm going to put it down in the description down below for the folks listening. So, Greg, how can people find you? Are you on any social media? What's the best way to connect with you?
yeah, definitely. So you reach me on Facebook, Greg Moss. There's a ton of them out there, but I just started Instagram. I'm not the greatest with social media, so you can find me at the Greg Moss on Instagram, and that's honestly probably the best way to reach out to me because I am pretty responsive. If anyone DMs me on Instagram or Facebook, so those are probably two best ways to contact.
Awesome. Well, thanks again, Greg. It was great to chat with you today, and hope we can do some business together going forward.
Yeah, definitely, Cal. I'm looking forward to hopefully working with you and also seeing our journey on Project Forward from start to 6 months from now and seeing us grow together. So,
Yes, sir. Yes, sir. It'll be good. All right. Take it easy, man.
all right, take care.